All right, guys. In today's video, I want to share with you a massive tool that has helped me understand the Bitcoin macro chart, and that's the 200 simple moving average. I use it to characterize what I consider to be the price floor, especially in the Bitcoin market, but other markets as well. Now, we're looking at the Bitcoin USD chart on the weekly. I've got the 200 simple moving average, and you can see here how just at a very obvious surface level, right? Every time price tests the 200 moving average, it's a massive buying opportunity. So you see right here initially, again, it takes the 200 moving average a long time to populate. It starts populating there. But, Bitcoin had spent, over a year in a bear market, right? All of 2014. And then the early part of 2015, right? Until you get here, right? And then in the summer of 2015, you get something different starts happening, right? The weekly puts in a higher high after sitting in steadily higher lows for a year, puts in a higher high, comes back, rallies off the 200 moving average, and then it's off to the races, right? You get your bull market, your parabolic blow off top, and then price retraces, in a bear market for a year. At the end of the year, comes back, tests the 200 moving average, and that's a great place to reload on your spot position. Ends up rallying off there pretty dramatically, and then coming back here during the COVID Black Swan event, COVID 2020 March dump, came there, and basically rallied above. This is a good example of how, like, you don't want to get too in the weeds with price. This is a macro thing, so you want to be keeping a really bird's eye view on it, right? If you're in the weeds with it and you're thinking, if you go down there and you're thinking, you know, oh no, it closed below, what am I going to do? Well, it's not really, if you're taking a bird's eye view, really what you see here is price came down, tested it, rallied off. And that's Bitcoin has shown a characteristic behavior of doing this, right? So, and now we're in a scenario where, the 200 moving average is actually, because of this more than a year consolidation, not necessarily a bear market, but just a year plus consolidation. The 200 moving average is actually creeping up towards price. So maybe you are bearishly inclined and you think these lows will get violated. Well, if you are, I think this offers you a really good price target to both take profit on any short positions you have, but also to load up on a spot position and maybe get one of those great trades where you ride a big one down, flip short, and then long at the support. Again, I'm not really inclined to think that those lows will break, but I do think it is a significant chance, right? Even maybe it's not the highest probability scenario, it's a very real scenario, and it's worth talking about. If these summer 2021 lows get broken, I would be looking at the 200 simple moving average. That would take on a weekly chart, several weeks to play out. It wouldn't happen in one candle generally. It'd probably actually take a few months to play out from where we are right now. And in that scenario, the 200 moving average would creep up a little bit. It'd probably be somewhere in around 24,000 by that time, by the time to meet somewhere around there. And I will be paying attention to that area. Now, I'm a little bit more inclined to think that these lows will hold just because, we have a higher high on the weekly. And this is important, right? Because you have these, price comes down very impulsively to this, what you consider macro support in 2021. And, price had to make a decision there, right? It could have continued going lower and violating these lows, but it didn't do that. It actually had a change of behavior. And that's important to keep in mind, right? It didn't break these lows. It actually broke structure to the upside and started creating higher highs. Um, so that's kind of how I'm framing the macro, and not really expecting these lows to be violated. But again, look, you could get a higher high on the weekly and a lower low on the weekly right afterwards. That is a very real possibility. Um, Again, it may not be the highest probability in the world, but it is a realistic scenario. And this is kind of the scenario I'm looking at. If that plays out, I would be looking down in that region right there, um, taking some pretty heavy, well, not necessarily profits because I wouldn't be short, but I would definitely be loading up on the spot position down there. Now let's see if we go to SPY chart. Let's see the 200 exponential SPY chart. Yeah, and you can see here, in the big picture, right? It offers very good buying opportunities. Go back all the way to, you can see price, respects this moving average, the 200 simple on the weekly, right? Comes down, offers a reaction, comes up, breaks it, comes back up, retests, sells off. Then you get your massive rally up into it, sells off, reclaims it. This is a good example of how the slope of the moving average is very important, right? Um, especially when you get that shift, right? That shift in the slope, right? If it goes from upwards to downwards, which you see right here, and then you get your capitulation right after that. And it's really important when it first slopes down, right? That's very important because you can see here as well, another illustration of that, right? Like you come up, price comes up, retests this level, sells off, and then it comes up and reclaims the level, right, on a closing basis, um, and rallies up higher. But the slope of this indicates a little bit of downward pressure still in place, right? So yeah, you get your rally off and then a dramatic sell off back into it. And the rally doesn't really take off until you get that upward slope on the moving average, and then you get your upward slope right here, and then it's off to the races, right? And again, price comes down. Doesn't touch it exactly right there, but from a bird's eye view, that's basically a test, right? Then actually here it gives you like a absolutely perfect trade, right? From an opportunity cost perspective and a price action level perspective, price comes down, probably a liquidation event for many people, rallies off. And then during the March 2020 event right here, you have a price close pretty dramatically below it, but in the big scheme of things, price came down. That would have been a good buying opportunity. Even right there, even if you bought at 263, yeah, you spend a few weeks underneath it. But if it's not a leveraged position, if it's a long-term buy and hold position, which is kind of the way you need to be playing the 200 moving average, um, you, whatever you got to trade with that in mind, right? And keep the position sizing in mind, right? If you're trading the 200 simple. But if you had a small position, low leverage, you don't mind being underwater a few weeks for a massive gain. Let's see. Now, if we go to Euro USD, see if the 200 exponential, or 200 moving average. This one is a little bit different than SPY and Bitcoin because SPY and Bitcoin, since they're benefactors of monetary debasement, right? They trade against the dollar. The dollar's debasing. Their 200 weekly moving average is in a perennial uptrend, right? It's never going to change slopes, really. It did during 2008, but for the most part, now going forward, probably not going to go to the downslope. But Euro USD, right? It's not affected by monetary debasement like that. Well, they both are. I mean, they both, are affected. But it's like if you have two people in the same car, right, and they're driving next to each other, you're not necessarily aware of like how fast each of you are going because your perception is relative to one another. That's what's kind of going on with Euro USD is they both are debasing, so there's really no clearly defined trend, and the trend can change around. So you see the weekly 200 kind of reflect that, and again you can see here that price pretty obviously reacts off this level to a general degree, right? Offering for most of the times where it shows a reaction there. Let's go to the gold chart. Yeah, gold is another example of how the slope is important to keep in mind, right? Price reclaims the downward sloping moving average, but the slope still hasn't sloped up, So that's an indication of still some downward momentum. So yeah, you closed above, but you still have a downslope. So get a sell off. And the rally doesn't really start or get going until the slope of the moving average curves around. And again, yeah, gold has a pretty bullish posturing compared to a lot of other assets. So it's hard to get bearish on it, but and that makes sense, because if you think about it, these are very uncertain times that we're experiencing the market in, and I think gold really represents the best hedge in those times, right? I mean, it historically has been that for a lot of major institutions, right? That these major, like people, these banks have been around for hundreds of years. They're used to turning to gold in times of uncertainty and war and famine and pestilence, all the biblical plagues you want to name. But, it kind of feels that way right now in the market. So it's not surprising that gold is benefiting from that. I think gold represents the best hedge, right? If you have a portfolio and you want to hedge the portfolio, just increase the allocation to gold, right? Just maybe you don't have an allocation and you put in a 5% Bitcoin, or excuse me, a 5% gold allocation somewhere in the single digits. It's probably going to be useful. Maybe not beneficial, but probably useful at some point. Of course, you also want to have somewhat of a cash position as well to take advantage of any credit contractions. And again, hopefully also a small Bitcoin position at the very least as an insurance policy against, credit default or any bizarre scenario that might be considered to be a black swan event that takes the world by surprise. In that sense, you know, just having those hedges, at least something allocated to each of them, opens you up to to those possibilities, the possibilities that exist behind those doors. Again, we don't know which possibility is going to come to pass, so we want to put ourselves in a position where we're able to pass through that door when the door does open, without knowing necessarily which door will open. Again, I hope you guys find this useful. This is, for me personally, the understanding the price floor has been very, very beneficial for me, very helpful. I hope you guys, are able to use it at some point going forward. You don't get many tests of it, but again, we're kind of in a position where the market's not trading that far from it, and depending on how the next few months go, or the next few weeks even, you could have an opportunity to use it. So hope you guys like this video again. Just make sure to like it and leave a comment below, and maybe subscribe to the channel. Again, I'll be uploading a monthly closure video coming up soon, so keep an eye out for that.